Welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Well, we kicked off the year for January in great fashion. We ended up with positive returns for the market overall. I think we finished the month of January just over 1% for the S&P 500, those largest 500 companies. I point that out because a lot of that S&P 500 performance over the past few years has really been driven by those 7 big mega cap tech names. A few that are included in that are Microsoft, Amazon, Meta, Google. Those are the companies that have been driving this AI push, and that's why we've seen strong returns in the overall index. However, this year, those stocks are not performing as well. I think a lot of profit taking, some concern about the maybe AI bubble, although we do not think it's a bubble, but there is a lot of spending going on by those companies in that space. Now, this year, where we think other companies in the broader index, those other 493 companies are benefiting from AI, and where we'll see their earnings, their profit margins, just efficiencies in companies will really boost our projections for earnings through 2026 and even into 2027. And so we do think this is going to be a market year where many people could outperform the overall index because we do have broad diversification and allocation to different sectors of the economy. So that's kind of the unique thing that happened in January. We'll continue to keep a close eye on that. Other things I want to mention, as we entered this year, I said there are 3 things that I'm keeping my focus on. We always think about geopolitical tensions. They always happen. We don't know what they're going to be, but typically they're short term. You know, they might be something that occurs, then gets resolved, or the markets realize it doesn't really impact the U.S. economy, and so we don't pay attention to it too long. In this case, we've already had a couple of those. When we think about the the Venezuela event, really didn't affect markets because it's such a small economy, has no impact on ours. Affect the oil markets. Oil prices went up on that news. Secondly was the Greenland incident, and I say incident, the conversation about the U.S. taking over Greenland, and that got quickly resolved. And thirdly is just the tensions with Iran. Again, that's affecting the oil market as well, and just gives us short-term volatility. The second thing I mentioned for volatility this year that I'm going to keep an eye on is the Federal Reserve. And many of you have probably seen in the news where President Trump has been very vocal about his disappointment in Jay Powell. And as a matter of fact, the Department of Justice is doing some investigation there. The concern there is that we must know that the Federal Reserve is independent of Washington. Without that, investors do not trust what's going on, and data, why we're cutting interest rates or raising interest rates, and investors will just pull out of the market. So our biggest concern is that we all know that this Federal Reserve is going to stay independent. While I state that the official appointment is in May by the president, although President Trump has indicated he will be naming Kevin Warsh. And when he mentioned that, the market actually had a sell-off that day because there was information that came out that Kevin Warsh is a big supporter of the policies that Trump has in place and is more supply side and will use that data and those policies to make decisions. Now, that doesn't mean it's bad or good, but I think the market first absorbed that as concern, again, about whether the Fed could stay independent. Since then, more information has come out about Kevin Warsh, and with his resume, a very strong resume and very qualified to be the chair of the Federal Reserve, and I think the market has calmed down on that. So we'll just keep a close eye on that as the official appointment comes in later this year. The third thing I'd mentioned for our focal point this year will be just the volatility surrounding the midterm elections. As you know, the markets hate uncertainty, and as we approach those elections, the uncertainty of how the House will shape up and the Senate will shape up will give the market some angst. And so with that, we'll see increased volatility. At the end of the day, if we see the Democrats take over the House, as some predictors are forecasting, then that actually could be positive for the market because it creates gridlock. Not much gets done in the shape of policy, and no big concerns there. So those are the three things we said we focus on. A couple other mentions. I like the fact that we are diversifying amongst many different sectors in our portfolios, even including international. International markets, I think, are going to continue to do well, as we've already began to see that kicking off January, that many of the foreign indexes are higher than the U.S., in particular the Asia indexes, because of all the AI tech investment there. So we'll continue to watch that, keep portfolios diversified amongst those different sectors, because this is a year that many folks can outperform the index without the index being driven by those mega cap tech names. And more the benefactors of AI will see their earnings and profit margins exponentially get higher because of the use of AI. So we're keeping a close eye on that as well. And we will continue to stay in touch and keep you apprised of our outlook for the remainder of the year. See you next month on Round the Table with Gratz Park Private Wealth.